We're calling that very sticky. Alan Blinder is with us. He's former vice chair of the Fed. He's now a professor at Princeton University in New Jersey. Great to have you with us, sir. Look, I know that you were part of the, those that believed that a pause or a skip was, pretty much in line in terms of what we should have been expecting. Yep. But I want to ask you this. If you were in the Fed right now, would you be signaling perhaps 2 more rate hikes this year? Do you think that should be on the cards?
Well, it's within the realm of the possible. I wouldn't personally be signaling. If I had a dot to put in the dot plot, I probably would have only gone up 1 more from where they are. What you need to realize is that at this stage, not earlier, but at this stage in the tightening cycle, differences between hawks and doves are starting to emerge. And Jay Powell has a very difficult balancing act. And I think this statement and the SEP together are an illustration. You give something to the doves, which is you don't raise interest rates, but you give something to the hawks, which is you pop up or you let them pop up the dot plot without any resistance. And that's, of course, what the market is reacting to. I'm a little bit surprised that the market is that surprised, because it always looked like, at least to me, 1 or 2 more 25 basis point hikes this year were likely.
Interesting. Look, I mean, headline inflation we know is going down, which is great news. Core inflation is sticky. That seems to be the issue. We've heard Jerome Powell talking about the lag effect. We don't really, we haven't really seen the full effect of this aggressive rates hiking cycle. Is one pause or skip enough to be able to ascertain just what impact it is having on the economy?
It's probably on the short side. If I take your word enough, sometimes you have to settle for what you have. It's only until July. It's not a long period between now and the next FOMC meeting. We'll know a little bit more about inflation, a little bit more about growth, a little bit more, and this is important, he mentioned that in the presser, about how much the banking system is suffering from the aftermath of, let's just call it Silicon Valley Bank. The books are not closed on that one either.
Alan, I mean, do you think that the banking sector can handle, another 25 basis point hike or 50 basis point hike by the end of the year?
I think so, yeah. Remember what happened. The banking sector, some parts of the banking sector, got clobbered by 500 basis points quickly. Yeah. So compared to that, another 25 or another 50, especially if it's expected, and I think by now it is strongly expected, at least in many quarters, it will cause some of those capital losses that plagued Silicon Valley Bank and a few others, but it's nothing comparable in magnitude to what happened in the past.
Yeah. There's been such a big focus on the employment scenario playing out. We've got a red-hot jobs market right now. It keeps hitting above consensus. We've got low unemployment. We know that the Fed's mandate is to, try and target full employment, but also try and manage inflation. It's a tough balancing act. Do we need to see a break in the labor market? Higher unemployment, because, where I come from in an emerging market, you don't want to see high unemployment. You know what impact that has socially on people. Why are we focusing on that? Is there another tool that they should be focusing on, as opposed to saying, look, we need to increase unemployment to try and temper wage growth?
The traditional Phillips curve view is what you just said, that you temper wage growth by causing slack in the labor market. With wages growing more slowly, prices can grow more slowly. And that's the indirect chain by which you get the core inflation rate down. We need to appreciate that Jay Powell and his colleagues are trying to pull off a Houdini act here. We don't have precedents for beating down the inflation without pushing up the unemployment rate substantially. I don't mean by 0.3%, but much more than that. That's what they're trying to do. And that's one of the reasons that he wants to pause and take a look at developments and make a better judgment with a little bit more data in July or maybe in September or whenever the pause ends.
In terms of terminal, okay, I think we've run out of time, Alan. Look, it was great to speak to you. Thank you very much for joining us. I'm sure we're going to have more of these conversations throughout the year.